What is up, everybody? Zach is back with another episode of Journey to $1 Million, and this is another day where we are getting further away from our goal. But that is okay. This is just a period of transition away from tech, away from innovation, into more the recovery stocks. We have the treasury bonds rising, the yields are up, financial sector is benefiting, and yeah, the recovery stocks are benefiting, like I said. So this is something that we knew would happen. We didn't know when it was going to happen. The stimulus is in talks in the Senate, and I'm sure there's a lot of questions on your minds, especially if you're a new trader. You don't really know how to handle it. Should I sell everything? Should I hedge my positions? Should I dollar cost average? Or should I just go on a walk? I mean, those are probably all things that you're wondering right now. So let's go ahead and take a look. The blog is up on prostockadvice.com, and let's go ahead and just jump right into it. Let's go ahead and look at it. Look over. The S&P 500 is down 1.3%. NASDAQ is down 2.7%. And Dow Jones, it's not doing very well either. It is down almost 0.4%. The notable picks that we had today, actually, we were calling out some of these a long time ago. As a matter of fact, we were calling out TRXC, which is the robot surgeon company, and that actually went up 22% yesterday. Pfizer is up a little bit, but that's as well as a lot of the other vaccine companies, and these will benefit. And nuclear is just super hot for a month or two. The nuclear and uranium plays have been hot, and this is one of our picks that's up 2% today. So I mean, the 2% is not all that much, but considering how much everything is down, I mean, got to take what we can get. And so, yeah, my portfolio is actually up $214,000, so I must be doing something right, but actually, that's not right. What happened is, if you guys don't remember, yesterday we were down like 300,000 or something, and today we're up 200. I mean, what's going on is the SOXL and TECL split. So once again, I will probably clickbait this title because it's funny to see the reactions of you guys. I don't really take myself too seriously most of the time. But anyways, so I can't really show you guys a good representation, but my portfolio is down because SOXL is down. But so pretty much, guys, I'm not really going to be doing anything these days except sticking to my strategy of cutting my short and mid-term positions, dollar cost averaging into my longer positions, no matter if it's ARC, and I'm even thinking about dollar cost averaging into SOXL because that one is down quite a lot. SOXL, TECL, TQQQ, I mean, basically it is what it is. It's down, but when there is blood in the streets, including your own, it is time to dollar cost average. And thus, after the famous words of the Rothschild, yes, Baron Rothschild, brain fart right there. But anyways, and then after the famous words of Warren Buffett is, when there is fear, be greedy. When there is greed in the markets, be fearful. So right now, there's basically just all is fear. So we should be buying these tech stocks. I see a lot of the talking heads, I mean, literally just go on no matter Market Watch or YouTube or CNBC, but man, everybody is freaking out. So this is an okay thing for us. We're just be aware. I even heard one talking head, they were saying that tech is finished. It's just totally finished. The growth is finished to what we know. And now these quote unquote recovery stocks like the oil or big box retailers or whatnot are going to be the new growth stocks. So this is just really strange for me. And then last night on the live stream, we saw an article because we were sifting through all the news last night to see what's going on, and we found an article saying that the treasury yields won't keep going up because once people do get their $1,400 stimulus checks, they're going to go ahead and buy the government bonds for like 1.4%, and then that would in turn push down the bond yields rates. And I'm thinking, like, what? People are probably not going to be taking their $1,400 stimulus checks and buying government bonds. They probably would be buying groceries and paying their rent or kids' school supplies or whatnot. But so just take everything with a grain of salt. As soon as these people, especially the fund managers, say these things like this, they're probably immediately getting off air and buying Microsoft and buying Apple while everybody else is panicking and selling these things. So that's what I think. Let me know if you have a differing opinion. Always great to have a nice conversation with you guys, especially in the Discord. I don't have so much time to respond to everybody, but hey, I'm read a lot of things and liking your comments on YouTube and whatnot, so that's really cool. And go ahead and like and subscribe to this if you are suffering with me. But hey, it is what it is. This one is, I mean, there is a silver lining to all of these things because I did just a basic technical analysis, and I mean, we've been doing the technical analysis on the NASDAQ and S&P 500, but the NASDAQ, so the triple Q, it has broken the 50-day moving average 2 days ago, so that was a key support. And then we're trying to draw out a trend line here, and this was from the end of October bottom out, which was that last red candle was the 31st, I do believe. And so, yeah, I mean, we tried to draw a trend, but it's not holding the trend, so take those with grains of salt, guys. It can keep bleeding, and we're right along the horizontal line of, you know, what we were down to last week. So yeah, anyways, and it's the same story, similar story with S&P 500. So the SPY is a little bit better, but of course that's normal. NASDAQ is tech heavy. But for the SPY, we are pecking on the 50-day moving average, and we're pecking on the super trend about to flip. But these trend lines are not holding up, so we're looking towards more of the EMAs and the MAs. And then my personal favorite is the SOXL, the SOXL. These candles are just super big. It's a roller coaster ride that we're going on, but yeah, I mean, I'm thinking about buying some more. Again, when there's fear in the streets, be greedy. And you know, when there was a lot of greed going on, we should have probably been a little bit more fearful. But with that said, if you do case studies, I think 66%, around 66% are green days, and 33% would be red days. Because stocks do usually go up, and of course we could be in the beginning of a crash, but I personally don't believe that. This is clearly a transition to the recovery stocks out of tech right now, because those are going to be more volatile, and the recovery ones, including financial ones like Wells Fargo, JP Morgan, and Bank of America, they're doing pretty good right now, but that's normal because of the rising bond yields, and also the tech companies that are borrowing a lot of money while the interest rates are going to be going up because of this, and then there in theory that wouldn't be very good for them. It would be more expensive to borrow money. So I mean, it all makes sense. Like, we're pretty clear of what's going on. So really, at the end of the day, stick to the strategy. Make your own strategy. I hope you guys let me know what your strategy is. You might be selling everything and going into, you know, the financial sector right now. You know, whatever your strategy is. But for me, my personal strategy is going to be cut short-term positions until the market stops bleeding. I'm not interested in getting into any short or mid-term options, because if we're going down, we're losing a lot of money. If we're flat, we're still losing money. So it's not really going to help. I have 2 hedges, so we'll see how they're doing. They're not doing all that well because we're not tanking so much. I mean, look, we're beside the NASDAQ is a little bit below the 50-day moving average, a little bit, a couple candlesticks below, a couple days out. But everything else is not looking all that bad. I mean, you know. And I'm not saying that it's not going to stop. It's going to stop going down, but it's not so bad though. We're not down to like the 180-day moving average or anything like that. But anyways, until the market stops bleeding, I'm cutting my short-term positions, and we just recently got into that Costco one, which I'm going to hold the earnings is tomorrow. And then the Jumio one I got into, which actually improved a little bit, but I still might be raising capital on those and then sinking the money into the long-term positions right now. No matter if it's Soxel, Teckle, Triple Q, different ARCs. I mean, those are taking a big beating, but I'm going to start dollar cost averaging on what is down the most. So it's most likely going to be the SOXL for me, or TECL, or the ARKK was down like 6.5% today. So yeah, I mean, that's my strategy, and that's what I did in September when we had the bigger dip, which I will show you guys on the Triple Q. So this is what everybody is referencing, was this one right here, and that was a little bit painful. And then you saw, like, even when we did reach about the bottom, which it did pass the 50-day moving average, and it traded right below it for 1, 2, 3, 4, 5, 6, 7, about a week before it gapped up. So everybody is saying that this one is going to be similar to that, and yeah, it seems like it is. These candles are a little bit smaller than we're seeing right now, but more or less it's the same. And this is on the triple cube, so just keep in mind that we might be flat for a while. Don't get your hopes up. So flat is not good for call options or whatever. We're going to lose money for the decay. And then we're just going to wait it out until the bond yields stop rising. Eventually they will stop rising, and the money will flow back into these tech and growth, because no, the the oil companies are not the new growth stocks. Wells Fargo is not the new growth stock in innovation, and I mean, that's just ludicrous, but hey, it is what it is. So stay strong. Dollar cost average, I wouldn't get into many short-term options unless it's a hedge against the triple Q or semis. I mean, unless you're hedging it, I wouldn't really touch anything like this. I mean, it's a little bit too risky. I've already got enough options positions where I'm suffering from them just a little bit, but of course we're going to dollar cost average down. And once we see one of these huge green candles, then we could even start taking a little bit of profits, maybe breaking even on some, just trying to get out. But I'll be looking to the futures today. And yeah, I mean, hopefully guys, you're okay. Try to take a walk. Don't take these things too seriously. Eventually we're going to get paid. Eventually the bond yields will stop rising. And look towards Friday. The job reports and the stimulus getting passed in the Senate could help out a little bit. And once those checks start hitting, should be later this month, I do believe, we should see some more green candle days for tech and growth. But anyways, guys, stay strong. Go ahead and follow me on Twitter. We are doing the live trading there, and almost every day we're live streaming, but I might take a break for a few days because there's just not many calls that we're looking to get into right now, so we'll see. Probably not so interesting for you guys, but hey, I mean, let me know if you want me to keep live streaming during this stock market pandemic. That's what it feels like. But anyways, guys, let me know if you have any questions. Reach out to me, and I am all ears. See you guys on the other side. Peace.